PS Invest Plays here today. We're going to speak about SPACs. We've seen a bloodbath in SPACs in the last couple of months. Are they going to revive in 2021, or it's time to cut your losses and just move out of them? Also, we're going to speak about ARK ETFs. They were the best performers in 2021. Now, most of the ARK ETFs like ARKK, ARKW, ARKF, ARKG, ARKQ are down by more than 30%. Is it the end of Cathie Wood and ARK ETFs? Or it is just a temporary phase and you should remain focused and stay invested in ARK ETFs? What is my outlook for SPACs and ARK ETFs in 2021? And beyond. Also, we're going to speak about rotation in value and recovery stocks and Nasdaq underperformance. We'll look at Elliott Wave and understand where do we stand from a technical standpoint. So stick around, and I think you will like what I have in store for you today. If you like this video, please don't forget to subscribe, hit the like button, and share this video with your friends and family. This helps me grow my YouTube channel and also bring out this content to my YouTube family. With that said, let's get started. I'm going to start with some of my notes, and as usual, I cover my notes in a presentation. So let's take a look, take a deep dive into SPACs first. In SPACs, we've seen extreme price jumps in 2020, early 2021, on the higher side, but off late the investor sentiment has changed. Many SPACs are trading way below their peak price, and some are even below their $10 offering price. Examples are right here: PSAC, TB, TPGY, THCB, FIII, VGAC. They were very promising in 2020 and 2021, but now they seem to be falling out of flavor. So what's going on in the bigger picture? Since the Nasdaq correction in late February and March this year, investors are selling riskier assets. And why is that happening? Long story short, economy is improving. Economy is opening. Now, investors are understanding that and rotating out of riskier assets and moving into value plays. So in 2021, I think you should be extremely cautious when investing in SPACs, and 2022 and beyond. As far as SPACs are concerned, if you really want to invest in them, look for an excellent team behind a SPAC, look for a good company business and revenue model. As far as expectations go, do not expect crazy price jumps that you saw in 2020. Now, there would be many pundits on YouTube saying that this is temporary and in second half of 2021 things will stabilize and prices will move up. I don't agree with that, because in 2021, as I said earlier, economy reopening is happening. Rotation into value and reopening stocks is happening. I don't expect any new stimulus checks. There will be an infrastructure bill or American Families Bill, but they are not stimulus payments. Inflation is rising, and with that, I think the bond purchases by Fed will reduce. Interest rates will rise. Think of interest rates as gravity to riskier assets. If interest rates fall, that means the gravity is going down, riskier assets go up. If interest rates go up, riskier assets goes down. And that is exactly what we are seeing with SPACs, any penny stocks. And I would not be surprised that we see this action, price action, in cryptocurrencies as well. So be very careful. I see crypto is peaking out. There might be a small leg that is left. And after that, I would just advise to be extremely cautious. Take your profits. Interest rates will rise, but I don't think they will rise in 2021, but market is expecting them to rise in 2022. So if you are invested in SPACs and you are in deep losses, what should you do? I would advise you that anytime that you see a good price jump and you can lower your losses, sell, cut your losses, invest that money somewhere else. So this is my outlook on SPACs. I wouldn't necessarily say that SPAC investing is dead. However, you have to be extremely cautious. You cannot buy any and every SPAC that is out there. Look for a good business model, look for a good SPAC team, and look for a SPAC that is merging with a business which has good revenue stream. So trade with extreme caution. All right, moving on to ARK ETFs. Now, in 2021, all ARK ETFs are underperforming compared to the overall market. I mean, that is a given. All ARK ETFs, as of this recording, were down by between 20 to 30%. And I think they have gone down even further as the Nasdaq has been underperforming. In one of the statements from Cathie Wood, she mentioned that ARKG's capital management that lost $30 billion in March of 2021 had some role to play in the underperformance of her ETFs. And the reason why I say that is if you take a closer look at all the stocks that ARKG's capital management had in its portfolio, there is almost a 30% overlap of those stocks between ARKG's and ARK. And when ARKG's collapsed, what do you think happened? ARK ETFs lost 30%. And that, coupled with the Nasdaq price drop, has intensified the sell-off. Now, the saving grace is that ARKG's invested using margin calls and leverage. These are extremely dangerous ways to invest in the market. These hedge funds, capital management companies, they use these strategies to maximize performance, and they are, I would never encourage using margin calls and leverage. The saving grace for our ARK ETFs and Cathie Wood is that she uses tested and tried methods. She understands the business, future of that business, and invests early. Think about it this way. Tesla in 2013 was a company that was about to collapse. They had shortage of funds. They could not even cover funds for the next 6 months. Many of the companies that ARK ETFs are investing in are similar in nature. Now, I'm not saying that all the companies in ARK ETFs are going to do well, but many will. And when they do, the payout can be substantial. Also, Cathie Wood doesn't use margin calls and leverage. She actually purchases these stocks, which is a saving grace. Now, ARK ETF and Cathie Wood, they are caught in some sort of a market game. Due to the rotation into value stocks, inflation risks, bond yields, and interest rate increased risks, many of the stocks in ARK ETF are underperforming because these stocks may not have excellent balance sheets, and also they have very high EPS multiples. Many are also buying put options against ARK ETFs. Now, put options are, just understand that put options are someone is betting against your stock price. They would make substantial gains if the price goes down. There is huge amount of negative sentiment. Jim Cramer, media, they're all bashing ARK on a daily basis. I don't know what their motive is, but it's clearly not helping us. My 2 cents, what should you do with ARK ETFs? If you listen to Cathie Wood, which I do whenever she comes out with a podcast, weekly webinars, a monthly market outlook, she genuinely understands macro and micro landscape. Short term, in the 1 to 2 years, there will be wild swings and our ETFs might underperform. So if you are holding them for short term, be extremely cautious. Long term, her investment style is a winner. As I said earlier, imagine if you had invested in Tesla in 2013. So what should you do if you're a long-term investor? This is the exercise that I'm doing. Dollar cost averaging on a monthly basis, and put your portfolio on an autopilot and shut down all the negative sentiment around you. Long term, ARK ETFs should do well, and that is what I'm doing by being invested in ARK ETFs for the long haul. All right, moving on to the Nasdaq and its underperformance in 2021. We saw in early 2021 the GameStop saga. Nasdaq underperformed and then had a small correction, and it spiked right back in February. And since February, it seems that was the peak. I mean, in April, it bounced back again, but in May, it seems to be falling behind other indexes. If I look at the technicals for Nasdaq and look at the Elliott Wave, which has helped me a lot in understanding the micro and macro dynamics, is that we are currently in the 5th wave of the bull run that started in 2008. Now, 5th wave is in Elliott Wave. First wave, there are 5 waves. 1, 3, and 5 are bullish waves. 2 and 4 are the correction waves. Third wave out of these 5 waves is the longest and the most bullish wave out of all the waves in Elliott Wave. So I think that we have finished the first 4 waves and we are in the 5th wave now. If I look at the technicals, and which we will look in the next couple of minutes, is that fifth wave seems to be halfway through and has some more room left. Due to the uncertainty in the markets regarding economy reopening, higher bond yields, anticipation of reduction in bond purchases by Fed, and increase in interest rates, we seem to be in a flat correction in the fourth wave of the larger fifth wave. So even as I said, Elliott Wave has 3 bullish cycles, 1, 3, and 5, and 2 correction cycles, 2 and 4. We are in the fifth wave of the bullish trend that started in 2008. Now within the fifth wave of the bullish trend, there are again 5 waves. So you break it down, every wave has its own, all the 3 bullish waves have its own 5 wave trends. Now in the fifth wave, we have completed first 3 waves, 1, 2, and 3, and we seem to be in the fourth wave of this larger fifth wave of the bull run that started in 2008. We'll take a look. I understand that this is probably confusing. We'll take a look at the charts and I'll explain what do I mean that we are in the fifth wave. We are in the fourth wave of the larger fifth wave. Just remember one thing, that I expect Nasdaq to bottom out around 12,000, and May month can be very choppy. And in summer, there could be more pain. My 2 cents, just remember one thing. Whatever the media tells you, economy is doing better than 2019 and much better than 2020. In the short term, which is 1 to 2 years, it will be a painful uptrend. What that means is that there will be deep downward pressures, what we saw in late February and in March, followed by very slow positive movement that takes you higher than the higher point achieved in the last month or in the last peak. There might even be 10 to 12% corrections, and that is what I was saying. Expect a correction in summer. High-flying stocks will be punished even after excellent quarterly earnings. Be extremely cautious. So if you're investing in high-flying stocks like Pinterest, Twitter, be extremely cautious. The long-term case for Nasdaq is bullish. After the fifth wave of the larger bull run is completed, expect a healthy correction. Now what triggers it? I have no idea. When will that happen? I expect that to happen in the next 1 to 2 years. How do you make money out of this? So anytime that you have made some profits and see that the market has crossed the peak that it achieved in the last week or 2, take your profits. Book some profits, 10%, 20% profits. Keep those profits and deploy when you think the market is down 2%, 3%, 1.5%. I expect the market to top out around 15,000 or 15,500 maximum. That is when I expect the fifth wave, the bull fifth wave, to end. At that point, as soon as Nasdaq reaches any price point between 14,500 and 15,000, I would advise you to book your profits. One way to reinvest that money would be dollar cost average if you're a long-term investor. And if you really want to leave your portfolio on autopilot and don't want to think about all these things, just do dollar cost average on a monthly basis or whatever works for you. Weekly, bi-weekly, monthly, quarterly, dollar cost average. If you had invested in 2008 and kept investing starting 2008 up until now, even after a 35 to 40% correction that we saw last year, you would have still come out way ahead if you had just invested short term. So dollar cost averaging works. Couple of points that I want to bring to your attention. Millionaires are made who show patience. In future, you might see some big red days. Stock market always makes a recovery. 2007 and 2008 market crash and recovery was less than 8 months. Do not panic sell and always consider dollar cost averaging. Now let's look at the charts, Elliott Wave charts. So as I said, in 2008 and 2009 is when we bottomed out, and as per the Elliott Wave, this is wave 1, wave 2, wave 3, and wave 4. And this is the fifth wave that I was talking about, which is the bull wave that is going on right now. How long will this last? Many a times this wave, fifth wave, is equivalent to or is the same size or same duration as the first wave. Now, if we can see, the first wave started in somewhere in 2009, and in 2011 it finished, which is approximately 2 years. The fifth wave here started in 2020. So I expect this wave, fifth wave, to last at least 2 years. So somewhere in 2022, sometime in 2022, this wave should end. Now, if we look deeper in this fifth wave, now this is a monthly chart. Now, if I look deeper and go do my analysis on this fifth wave on a weekly basis, we can see that in March of last year, we bottomed out after a correction. In September, we finished our first wave. In early November, we finished our second wave. In March, we finished our third wave. And now we are in the fourth wave. We are definitely not in the fifth wave because it seems to be forming an ABC pattern, or a flat or a extended flat correction. It's creating higher highs, lower lows, and I expect Nasdaq to fall down and maybe breach the lower low that we saw in March of this year, which was around 12,300. And right after that, when it crosses that point, I expect Nasdaq to jump up and start the final fifth wave of this bull, the larger fifth wave. This is what I think is going to happen with Nasdaq. Again, please do your due diligence. And I'm extremely bullish on the American stock market. These are small blips. And as you can see from the Elliott Wave that started in 2009, and you can always go even before that period. We are in an uptrend. We are in a bullish trend. We are not going down. What that tells me is that be invested. Don't lose hope. The losses that you might see today, when you look 10 years from now, those losses will look smaller in comparison to the gains that you would have made if you keep investing regularly, dollar cost averaging. So that is what I would advise you. Short term, be extremely cautious. Book your profits when you can. Long term, don't even worry about it. Just keep dollar cost averaging and you will come ahead. Well, that's it for today. If you like this video, please don't forget to subscribe, hit the like button, and share this video with your friends and family. It helps me grow my YouTube channel and bring out this content to my YouTube family on a regular basis. For this week, see ya.